So this is coming from CNBC. Whites and Tan is the author, published March 22nd. Title states red flags as some China property developers say they can't release earnings on time. This seemed interesting. A slew of Chinese real estate developers said this week that they are either not able to release their financial results on time or have to set broad meetings for them. Among them is the troubled property developer Evergrande, which shook investment markets last year as a result of its debt crisis. The developers gave a variety of reasons for not being able to do so. In a filing to the Hong Kong Exchange on Tuesday, Evergrande said that due to the drastic changes in its operational environment since the second half of last year, its auditor added a large number of additional audit procedures this year, coupled with the effect caused by COVID-19 outbreak. Evergrande will not be able to publish results by the end of March for its year-end December 31st, 2021, is said in the filing. It said that it will publish the audited results as soon as practicable after the audit is completed. Other developers said the resignation of auditors meant they could not issue their financial year 2021 earnings on time, according to Japanese bank Nomura. I quote, Nomura says, when developers change auditors ahead of their full year result seasons, it typically raises red flags regarding potential auditing issues and should lead to serious market concerns. Developer Ronshine said Monday that PricewaterhouseCoopers, PwC, has quit, citing insignificant time for the audit as well as the COVID resurgence in China as two main reasons for the resignation. In the past 2 months, developers such as Oyan, Shanghai, Shamao, and Hobson also announced change of auditors. When developers, again, this was the same quote, when developers change auditors ahead of their full year results season, it's typically raised red flags regarding potential auditing issues and should lead to serious market concerns about the trustworthiness of their financial numbers. As of Monday, 9 property developers have yet to announce the dates of their 2021 broad meetings. The likelihood of more developers being unable to release their results on time is rising. Norma said, considering that listed firms need to announce their broad meeting dates at least 7 working days prior to the actual result dates, which are set to be March 31st by the latest. Even if developers manage to issue their 2021 results on time, we expect qualified opinions and weak results in general. Squeezed margins, declined profit, reduced dividends payout for 2021 2022 for the sector in the coming 2 weeks, which would further weigh down the sector share prices, in our view. Property sales of leading developers continued to plunge this year, according to Norma data. Evergrande's sales have fallen more than 90% year over year in the first 2 months of the year. Shammo tumbled by 60% in the same period, and Sunac fell by 26%. Investor confidence was boosted in mid March when China signaled support for Chinese stocks and indicated the authorities would work toward stability in its struggling real estate sector. That sent markets in Hong Kong soaring last week, including property stocks. However, real estate shares have struggled for direction since wavering between gains and losses. Shares of major real estate developers such as Chameau, Sunac, Evergrande, Country Garden are still generally hovering below the lows that they plunged to after the Chinese real estate market was hit by a debt crisis last year after the government moved to tame debt. Evergrande's problem came to a head after the authorities rolled out the so-called three red lines policy last year, which started to rein in developers after years of growth fueled by excessive debt. The policy places a limit on debt in relation to a firm's cash flows, assets, and capital levels. As debt crisis unraveled, other Chinese real estate developers also started showing signs of strain. Some missed interest payments while others defaulted on their debt altogether. However, China signaled it could start easing last year as it seeks to boost slowing economic growth in the face of the pandemic challenges. When Beijing set a GDP target of around 5.5 for this year, leaders also spoke of plans for more economic support for businesses. That was by your CNBC, Commercial Real Estate, China Economy by Wisen Tan. Pretty interesting what's going on over there. You don't hear much of a China right now with the Ukraine and the Russian. It's kind of like there's three players, and when 1 and 2 players are going against each other, the third player sits back and wait, or when the 2 and 3 players going together, the first player sits back and wait, and that's what we kind of got going on right now in the world of economics and geopoliticals. But let's not get into that. Let's talk about the 10-year Treasury that just keeps raising and increasing. Wall Street Journal Markets reports the U.S. Treasury note at 2.350. 2 weeks ago was at 1.9, below that 2% mark. It hadn't reached 2% mark in quarters, in years. Now look at us, 2.351 for the 10-year. And lo and behold, current market rates are doing the same thing. Look at that. Just keeps going up. And the Feds aren't helping it by increasing their Fed's rate by 25 bips and saying they're going to increase another 7 times up to 2023. So the mortgage, let's see, the mortgage 30-year fixed rate right now, interest rate 4.525. APR, a couple points on there, puts you up around 4.615. 20-year fixed rate, 4 point, APR 4.2, and then it keeps dropping while you decrease the number of terms. 15-year fixed rate, 3.6, 3.7. Seems like where it was just at. Anyways, I'm David Magard. That was your quick article about China, reporting on the 10-year. Mortgage rates still going up. We'll talk to you tomorrow on Property Value. Have a great day.